Okay, first question. This is a paper for February-March 2020. Okay, Amara maintained a petty cash book using Impress system. The Impress amount of 200 is restored on the first day. So the key thing that you need to take note is the Impress amount 200 restored in the first day of each month. So means that on the first day, they will put in the balance. So based on this information, we put in the amount 2020, January 1st, because the month is January 1st. And the balance is balance brought down because beginning of the month, 65, which is from here the information. They say they have to restore it. And all payment of less than 100 are made from the petty cash. On 1st January, Amara owed 85 to Razwan, a credit supplier. So this is a January transaction. January 1st, the petty cash Impress was restored from the business bank account. So in this case, this detail must be bank only, cannot be the cash. Because they say business bank account. So take 200 minus 65. So this is the restore amount that they given. Okay, they restore. Okay, next is that on the 3rd, they say purchase stationery for cash. They mean use the cash to buy the stationery. And this amount is less than 100. So therefore, the amount will be recorded in the petty cash book. So this amount is, let me put in properly first. Okay. On the 3rd, this is on the 3rd, stationery. Because it's less than 100, we have to use petty cash book. So go to the stationery column. This is an analysis column. 3 column is an analysis column. On the 7th, pay traveling expenses. So traveling expenses. And the amount is 49. So here, traveling expenses, 49. Okay, next is that 14. Pay Razwan outstanding on his, how much outstanding? 85. So on 14, pay Razwan 85. So the amount 85 putting in here. Next is that on 19, purchase goods on credit from Razwan 200 less 10%. The double entry for this one is not related to the petty cash book, but we just put it down. Debit purchases, credit Razwan. So this is for on the 19 transaction. Purchase goods on credit. Okay, so this is a double entry for 19. So on 22nd, pay taxi fare. So the taxi fare is amount to taxi fare. So the amount is 18. Okay, this one put 18 in here. Okay, 28. Return goods to Razwan, which has been purchased on 19 January list price. So this one, nothing to do with the petty cash because this is related to the double entry for it is debit Razwan because Razwan received, and then credit purchases return. So this is for this information that we have. Okay, now next, pay postage 11. So in here, we have to put in the amount on 29. Pay postage. So $11. So postage is under the column postage and stationery. So this is the amount. So after that, no more entry related to the petty cash book. So we can close it to calculate 31st balance carry down. So take the total debit minus the credit. So we get $13 as a balance. So 13. Okay. Here put February 1st, and then balance brought down. If the question asks to, because they say the first date, so better restore it 200 minus 13. So put in, assume it's from the bank as well. So this is for the petty cash book. Anyway, what else the information that you can gather from this question? This one we record already, the restore. This one is a petty cash, pay outstanding. This 14, something you saw Razwan, that means it's related to the account you need to record. January 14, pay Razwan, that means Amara giving out the money. But because this question is a petty cash book, so you have to change it to petty cash. Don't put the bank, because normally in the exam it's a bank, but because this is a petty cash, pay via the petty cash book. So this amount must be petty cash, not the bank. Okay, next item. One more. Okay, on 19, purchase goods on credit. The double entry stands from Razwan point of view is debit customer, credit the sales. But because they have the amount which is 200 less 10% trade discount. Trade discount, no accounting entry. Straight away calculate, take 200 times 90% to put into the sales and the customer account. So on this side, you have to take 200 times 90, 20, how much the percentage? Let me see. 10% trade discount. So the amount to record is 90%. Okay, next is that, what else the information that we have? Let's see. Okay, here on 28, return goods to Razwan, which has been purchased on 19. They are talking about this amount return refer to this related. And they didn't mention any about the trade discount. They just say that list price $40. Don't forget when you do the recording, you must minus out 10% as well, because you get 10%, now you return back 10%. So your this sales return, you must put in 40 times 90%, $36 only, not 40. And don't forget, in the exam, they normally won't mention anything, the returns related to the trade discount, but you need to automatically deduct it because it's part of your amount that you have to refund back. So those items not relevant, you take it up, because this is just an idea for you. What are the trade receivable normally appear? Those that not appear in the question, don't need to put. So this one is like a formula for you to take note. What is the debit? What is the credit? Now we go back to this question. So debit and credit subtotal first. Okay. Debit more than the credit. So your balance carry down here. So they had to put, don't forget, because it's carry mark one. So January 28. Okay. This one is not January, what date? January 14. Okay. This one is, I have to change this one first. Because we try to follow the date sequence, because the date not in sequence. Because in the exam, they particular all this one, so you need to take notes. Try to be in the ledger format. The date must be in sequence. So this one, your sales, the sales amount is on 19. Then after that, sales return is on 28. So take notes, date in sequence. Then the last day, 31st. 31st always is the last transaction. So take the debit minus these two amounts. So you get your balance carried out. And don't forget, always remember, balance carried down, balance brought down must be one pair. This amount must be one pair. Okay, now let's move on to the next. On 2nd February 2020, Amara paid balance due to Razwan. She deducted cash discount of 2%. Complete the following table by place a tick in the correct column to show how Razwan should record the cash discount. Where an account has no entry, tick no entry. This question saying that how Razwan should record. This means that Razwan is a seller. Seller will record the cash discount here is discount allowed. From seller point of view, this is discount allowed. And discount allowed is a expenses to the business. Now let's look into it. For the Amara account, just now in here, the standard account that putting in trade receivable, correct? This side is a credit. So Amara account will be in the credit side. Okay, take note. Amara account will be in the credit side. So Amara account, credit side. Okay, discount allowed. Here credit, automatically discount allowed account in the debit, because debit and credit concept. One debit, one must be credit. Since that Amara credit, here will be debit. Discount received is for the Amara. Okay, just in case you want to record stand from Amara book. Now we do from the Amara book. Okay. Now we are record. In case we are required stand from Amara point to do this recording. Amara will record Razwan account, and this is a trade payable. Stand from the trade payable point of view. The double entry. This side balance brought down. Okay. Here we have purchases. If you receive interest or you supplier charge you the interest, you have the interest charge. So the interest charge to Amara is expenses. So this side is in the credit side. In here we have purchases return. Purchases return is to reduce the purchases amount. Bank, and then discount received. So this is some standard account that debit and credit for trade payable, trade receivable. So for this trade receivable, for this account, they highlight to us that they want Razwan record, not Amara record. So this discount received, actually Razwan don't need to do record. So discount received account, no entry, because this is stand from Razwan point of view to do this discount allowed. Okay, let's move on. Okay, Amara usually pay Razwan by cash or check. Stick to other method which Amara could use to pay Razwan from her bank account. Okay. Some term that you need to familiar in the banking industry that or in your syllabus that you will learn in the bank reconciliation a lot. Credit transfer. What is a credit transfer? It means that customer use online banking to transfer to supplier. This is the one of the weak credit transfer. Another is that standing order. What is a standing order? Standing order is an instruction given by the business to bank to make fix. The keyword the key is a fix amount and date to a person or business. Okay, instruction given by the bank to make payment with fixed amount and the fixed date. Other than that, you also in your syllabus you need to know is a direct debit. Okay, direct debit is instruction given by the business to bank to make payment with non-fixed amount and date to a person or business. So the differences between these two accounts, this standing order, okay, these two differences, one is a fixed, one is a non-fixed. Okay. Okay. GHB Limited maintain a full set of account, record and prepare monthly control account. So that means this is related to the control account. Control account is similar to the sales ledger control account or purchases ledger control account. Is similar to the trade receivable or trade payable. Exactly same position. Just now you have done the first question. You have seen that debit and credit side. So same thing for this one. The following information was provided for November. This is all the information debit and credit that later on. We see what is the question they asked first. Prepare the purchases ledger control account. For, I mean this, they asked to prepare the trade payable account. So what is the item that related to the trade payable? The first question that I mentioned here, trade payable. What is the item normally in the debit? What is the item in the credit? This is the will appear in the second question as well. So they say that purchases ledger control account balance at 1st November. They didn't give you the amount. They give you the blank. They're trying to ask you, find yourself. What is your balance brought down? How are we going to find this one? Last balancing figure put into here. Purchases journal is referred to the purchases 14,200. Purchases return is in the debit side. November 30th, purchases return. In the notes that I have the control account, I do have the 2 slides related to this T account. So refer back to that. Cash sales, take notes, control account only talk about the credit. So this cash sales is something extra. Don't put in, you won't take it. Commission receivable, this is also nothing to do with the purchases ledger control account. Cash discount received, cash discount allowed. Which one related to the trade payable? Just now I mentioned that supplier is a discount received. So that you have to take discount received. 650. Okay, next one. Okay, in the exam, in case that you get that sometimes we see wrongly the amount, use your ruler, underline every 3-4 row, underline it so that you won't see wrong amount, because sometimes this mistake can happen. Okay, next. Check paid to supplier. Okay, this is the bank. The moment they say check, that means we must take the bank, must write the bank as a detail. We cannot use the cash. Okay. Sales ledger contract. Contract entry is sitting in the debit side because you want to reduce the balance brought down. So here you put sales ledger control account, put bracket contract. And the amount is 250. Interest charged by the trade payable. I mean in here, supplier charge you the interest. It's expenses to us, it's an income to the supplier. So 95. Check refund from the trade payable. Supplier return to us. That means here we have the bank. But this one, they say refund, we just put refund. We don't know whether it's a dishonest check or not. So we write refund. So 330. Because when we pay supplier, supplier debit in here. But now supplier return back. So it will be in the credit side. Okay, now no more other entry. They say that purchases ledger control account balance on at 30th November. So this is the last day. Balance carry down. Last day carry down. Beginning brought down. So we subtotal the debit credit first. Okay. This one is a balancing figure, beginning of the question they already asked. Or sometime in the exam, it will be good for you to read again what is the question they asked. Prepare the purchases ledger control account for GHB Limited for November. Balance the account on 30th November 2019 and bring down the balance on 1st December. So they didn't mention, but we know that this question mark they want us to find. So this balance carried down, put it here, December 1st, balance brought down. This amount, we take this debit minus this credit total. This credit total is 14625. So we automatically get this 10. Hey, how come the amount is different? Where is my mistake? Let me see first. Something wrong with my account. My answer is wrong. 13. Okay. Am I type any error? Purchases return. Oh, sorry. Forgot to put in the purchases return amount. 1160. So here, I have to adjust. The amount is wrong already. Okay. So this is the purchases, the balance brought down that we need to put in. The balance figure, balancing figure that we need to find. Just now forgot to put in this amount. Okay, now the next, a delivery vehicle was purchased by check during November 2019. Delivery vehicle is a non-current asset. Take notes. Okay, Stick to reason why the purchase of delivery vehicle was not recorded in the purchases ledger control account. Just now I did mention delivery vehicle is a non-current asset. And what is the business this fellow doing? He didn't mention anything, but the moment they didn't say, we had to assume the purchase of the delivery is referred to the non-current asset. Unless they say they sell by the car, then delivery vehicle could be the goods. But because they did mention, we must assume delivery vehicle is a non-current asset. So non-current asset account will not record under the purchases ledger control account because purchases ledger control account is actually a trade payable account, which is only record the purchase goods on credit. On cash also not go to the purchases ledger control account. Clear? What is the different non-current asset and the purchase goods on credit? Purchase goods on credit means that we buy, purchase goods is referred to buy and sell the item. Whereas purchase of non-current asset, which is this one is delivery vehicle. This one is bought to use in the business to generate income, not to sell, not for sale. So how we're going to want to put into this information here? So the first one, you say purchase of delivery vehicle is a capital expenditure which record in non-current asset section. So there is one of the explanation you can give. Second explanation, you can say that these goods you want to buy to resell it. So purchase of goods is to buy and sell with the buy and with intention. This one in terms of the sentence, how you want to put in, up to you, so long as the examiner understand what you're trying to give the point, because IG is just more toward the point. You don't need to write how to say the sentence that how to say the complete not say complete, something will, the key point that the most important to let the examiner know what you want to answer it. Just a short sentence to give answer back what the question asks. For example, like here, I put purchase of delivery vehicle is a capital expenditure which record in the non-current asset. So that is what I'm trying to explain this first sentence. Second sentence, I want to explain the purchases ledger control account. So I use this one, purchase of goods is to buy with intention to resell the goods. The purchases ledger control account is to record purchase goods on credit. So this is what I'm trying to give the second point for this answer. One talk about the asset, one talk about the goods. Okay, now let's continue. C. State the most appropriate method of depreciation for delivery vehicle. Okay, explain three methods for you first. Depreciation method. We have straight line, reducing balance or diminishing revaluation. So in terms of formula, I will not explain in here. I just tell you there are three methods to calculate depreciation. For the asset, the nature of the asset, most of the time we need to see what is the nature of the asset to decide what method to be used. Like delivery vehicle, we will choose the reducing or diminishing method. Why we choose this method? Okay, this type of asset normally beginning of the year, less maintenance incurred, so that we will charge depreciation is higher in beginning year to average out the cost, the delivery when vehicle cost. That is beginning of the year. But after later year, the maintenance cost increase and depreciation decrease. So the F cost will average. Okay, so that is the reason why we use the delivery vehicles. Beginning year give more benefit. Okay, here can say that more benefit in using the asset. Okay, so that is a delivery vehicle reducing balance method. The reason is this starting less depreciation, after that starting depreciation higher, maintenance is lesser. Okay, now come to this one's number 2. Since number 2, they're also talking something about 3 reasons for your answer. Basically they ask this part. Okay, and the first part, the most appropriate, which is referred to this reducing balance. This one you just write reducing balance method, enough already, one mark. But in here, this is the explanation that we need to put in. Okay, for the C2, 1, here we can say that the delivery vehicle has less maintenance costs incurred at the beginning year compared to later year. Okay, this is first explanation I give. So that's why I use this one. Then second sentence, because this is related to the depreciation. So second sentence I say depreciation will be higher in beginning year compared to later year. The cost will average out for the asset use. Wait, welcome. Yeah. Okay, so this is for the number one. So number two, what we can say that, okay, number two. Okay, what is the point that you can use from here? More benefit of using the asset in the beginning year compare to later year. The meaning of this one is that normally when the asset is new, we will use it more often. After slowly the machine is not so good condition or the vehicle not so good condition, we will use it lesser because it's to reduce the maintenance. The purpose of it, we use it later, don't want to use so much because we try not to incur so much maintenance cost. So the benefit use of the asset earlier year is more compared to the later years. So that is the reason, one of the points that we can put in. Other than that, for the asset such that computer, machinery, vehicle, all this one normally will use the reducing balance method because this type of asset is more toward technology item, technology asset, technology change cause the value of the asset decrease faster and outdated when new vehicle model in the market. So this is some idea that we can put in to answer these three reasons. So, okay, if this one you think too long, you want to cut into one sentence also can, because no need to write long story. Okay, now let's continue the third question. I try to finish this paper. Okay, Tia and Sana are partner in a trading business. Their trial balance at 31st December as following. So when you have two person name, that means a partnership topic. Okay, see what are the questions they ask first. They ask prepare the income statement for, okay, income statement for these two person. So let's see what is the information that we have. We put in the here. Let's see. See what is the financial year first. Need to check. Tia and Sana. Okay, income statement for the year ended 31st December 2019. Okay, two column. Okay, let's put into here side by side, easier for us to do. Okay. Start from the revenue. There's 4 sections. I write down the section first before we do the question. Okay, first section, revenue. Second section, cost of sales. And then revenue minus cost of sales, we will get the gross profit. After that, add other income. We don't know whether got or not. We just put down first. Later on, we will see. And then after that, less expenses. Okay, so these 4 sections that we have, and then the last is the profit for the year, because income statement is to find profit for the year. So see what are the items. These 2 columns, take notes, is not about debit and credit. The first column, to put detail amount or the individual amount. So because quite often people ask, this is a debit, this is a credit. No, income statement is not about debit credit here. Credit is with not credit. This second column is actually referred to the, let me put in the, to subtotal the first column amount. If you have more item, then after that you subtotal put into the second column. Or sometimes if you only have one item, if only have one item or one item in first column, straight put into second column. There is in case you have only one item in that section, straight put this amount into the second column. Let's see what are the information that we have now. Revenue. Okay, the amount is 12400. Okay, is there any related to the revenue under the revenue section? Okay, let's see. Inventory, depreciation, the insurance, the partner interest of this one. Okay, there is no other talking about the revenue. I mean, in this case, just now I did mention that second column, we have to take the amount. Okay, let's put in. Instead, I mix out anything. Okay, let me see. So revenue, after that, no more. Then in this case, I have to put into here because no other item. So I have to take out this already. Okay, cost of sales, inventory, beginning of the year. Inventory at 1st January 2019. So put into the first column first. Okay, next, see what else that purchases. Here got purchases. In the exam, that one of the way that to avoid you double take or you miss out. After you put in the amount already, try to using your pen or pencil beside your question, you put a mark, tick. Then you know that you have already done this recording. You won't overtake again, double take it again. Okay. And if you too many lines, then you feel confused to see it. Every 2-3 lines, underline it to see clearly where the amount come from. Sometimes it's not, we don't know how to do. It's just that we wrongly see the amount. That is happened. Okay. Next, purchases. After that, see what else that item. Let me go down a bit. After purchases, let's see got any more. Okay, there's no more except the inventory. So in this case, we put in the inventory. Inventory at 31st December 2019. So purchases is 55440. Closing inventory is 5165. So we take opening plus plus purchases minus closing inventory. So we get the subtotal out first. Let me put up. Okay, this is our gross profit. Next, other income. See, got any other income? Other income, you tackle from the credit side. When you saw your trial balance, credit side, those item credit, you wash up, see which one is a credit. It could be the other income. Like example, other receivable. How come cannot see? Okay, this one, other receivable. And then what else? Trade payable, and then provision, and the capital. So which one is related to the other income? Discount received is other income. Trade payable, this is under current liability. Capital is under capital section. So we only take this amount. Okay. Discount received. Because it's only one amount, we straight away put into the second column. Okay, let's calculate first. Take this plus this, so the subtotal. Next is expenses. See what are the expenses that we have in this question. Let me check. Expenses. Okay, discount allowed. Discount. Expenses normally in the debit side. Discount allowed. And then carriage outwards. Okay, so these two put in first, 2004. Carriage outward is 6160. Insurance, okay, insurance is 7920. And then general expenses. General expenses, we ignore the additional information first. We put down the amount first. Okay, next is that wages. Wages 9600. And then no more. Okay, no more. Now go back to the additional information. Depreciation on furniture is to be charged 20% per annum using straight line method. Straight line method, the formula is, let's I put into the depreciation for furniture. Furniture. Okay. Furniture 24,000. If a straight line method, we straight away times the percentage. No need to put in the don't need to minus the provision. Take notes for the furniture. Straight away times the percentage, because they say that straight line method, the formula for the depreciation is, okay, I put down somewhere the formula for depreciation. Depreciation straight line is taking the cost times percentage. If they give you the percentage, if they give you the residue value, you take the cost minus residue value and then divide by the year. Or sometimes they didn't give you the year, they straight give you the percentage. Cost minus residue value divide times percentage, depending on the question. If they give you, they give you reducing balance method or diminishing method, the formula will be cost minus provision for depreciation times the percentage. Or sometimes they straight away give you the net book value. Net book value times the percentage can be used. If the question is a revaluation method, revaluation, we straight take the net book value, but this one is referred to the balance brought down beginning of the year, plus any new purchases, minus disposal of the asset, minus net book value of the asset balance carried down. So this is a formula to calculate the depreciation. 3 ways to calculate: straight line, reducing, revaluation. But this question is asked for the straight line. So we take 24,000 times 20%. So which is 4,008. Okay, see other adjustment need to be made. They say that the insurance include a payment of 2,160 for the 12 months from the 1st July 2019 to 30th June. First of all, what is our financial year? For the question number 3, information number 3, what is the financial year? Our financial year is from the 1st Jan 2019 to 31st December 2019. But this payment cover from the 1st July. That means we have the prepayment from the period 1st Jan 2020 to 30th June 2020. So what happened is this amount we have to take. Prepaid amount will be 2160 divided by 2, because 1st January to 30th June is a 6 months, so divide by 2. Let me see, 1080. This is a prepaid amount. So what we're going to do with the prepaid amount? In your this insurance, take notes beside your detail. 7920 minus 1080. And you notice that all my this working, the adjustment after I calculate, I will put beside the details. Show your adjustment, show your calculation beside your detail. Don't, sometimes the question give you 2 marks. So they have more adjustment. You show it, then he will give you the mark according to the adjustment that you give. So make sure any adjustment beside the detail. For example, here calculation, I also show beside the detail. That is important. Okay, now next is the partner agree provide interest on capital, salary, residual profit. So these 3 items, number 4 information, not related to the income statement, is related to the appropriation account. But this question didn't ask. This question only up to income statement. You don't go and take this amount, go and put into here. Don't need to do any adjustment for it. Okay, so we subtotal the total first, the expenses. Take this amount minus, okay, we get 31,820. Yeah, answer is correct. Okay, so far this is the part that we done. Okay, let's see some more, any question related. Okay, the appropriation account in the following. Okay, they ask us in the B section, prepare the appropriation account. Appropriation account, the standard formula. Okay, I show the standard formula first. Profit for the year, add interest on drawing. If you have the 2 partner, you list down individual name here, and then after that Sama. Okay, next is that less interest on capital. Same thing, you have two partners. Put in. After that, less partner salary. So we don't know who taking the salary. We put down the name first because the question in the additional information form. So this is the item that we normally have. Then after that, we calculate, we have the balance of the amount need to be shared. Share of profit. Share of profit also both appear. Now we need to see how much our profit. So profit, we get 31820. So in the exam, normally the risky part is that if your this profit for the year calculate wrongly, automatically your this mark will gone. Your this 2 mark normally will gone already automatically. If they give you 1 mark, this one 1 mark will gone because the top one must be right, then bottom only can be right. This is about the account, very risky when we first step do the wrong. Now, let's see, get any interest on drawing. We go to number 4, information. They say that the partnership agreement provide for the interest on capital of 5% per annum. A salary to tier, 6,000. Residual profit and loss to be shared equally. They didn't mention anything about interest on drawing. Since that they didn't mention anything about interest on drawing, we take it up. Okay. They only talk about the interest on capital. Interest on capital is 5%. First of all, how much the capital that they given here? 80,000, 40,000. So we take 80,000. 80,000 times 5%. So here is 40,000 times 5%. Show you're working all in this. Here we get 4,000. So this one get 2,000. Okay. And partner salary, number 4 information. A salary to the tier is 6,000 per annum. So only tier get the salary. So in this case, 6,000 I should put into here. And this one, I can take it out already because Sama didn't get salary. Subtotal, this is the less, 2 must be less. So we get the net amount, take the profit minus these 2. So this is the amount that we have. And now calculate the share of the profit. So how are we going to calculate share of the profit? Residual profit and loss to be shared equally. That means divide by 2. Show you're working, how you get it. 19,820 divide by 2. Okay, so this one, 19,820 divide by 2. So we put in 19,820 divided by 2. So each will get 99 and put the subtotal in here. So this account considered done. Appropriation account. Even though they say appropriation is a statement format, this is called statement format. Okay, now let's continue. Prepare the current account for Sama for the year ended 31st December 2019. Balance the account, bring down the balance on. They only want Sama current account. So we look into the Sama account, see what are the information we have here. Current account for Sama 160. They put in the credit side, we put into the credit side as well, 1,006. So here, 1,006. 2019, January 1st, balance brought down. What is the item in the credit side? You see the item in the appropriation account. Interest on capital partner's salary. This is income to the partner. So we put into here. So the date, last day, 31st, interest on capital. Okay.
Why 1,600 again?
And here you saw the amount, current account. Okay, current account, Sama, credit 1,600. Sorry?
Oh, yes.
Now, here, calculation, we based on calculation, this is 2,000. So we put 2,000 here. This amount, 2,000. Interest, because it's an income to Sama. Now, here they didn't mention Sama salary. So you don't put salary here. Just leave it because it's not belong to Sama. They ask for Sama account. Okay, now next is that in the debit side, because this question's a little bit special, they didn't mention interest on drawing. In case the question have the interest on drawing, this interest on drawing must be in the debit side. But this question don't have, so we ignore it, don't need to write. But in this here, your trial balance show that drawing 17,000. We have to put into here, 17,000. And drawing. At this amount, Sama receive profit. Share of profit or residual profit or share of profit. The amount 991. This is income. Credit side, basically, this credit side, this one credit is income to Sama. Debit is to reduce the money. Okay, so this is reduce Sama income. This is Sama income, this to reduce. So now we see which side is more, then we find the balance carried out. Okay, here you saw that debit more than the credit. In this situation, balance carried out in the credit side. 13510. And here we put 2020. Later I want to explain the situation. Okay, balance put down. Okay. Now, in the beginning year, okay, in the beginning year, this is showing that partnership owed money to Satna. Satna or Sama? Okay, Satna. Okay, owed to Satna. It means this one is Satna have money in the partnership, but end of the year, following year or end of the year, is the Satna owed to partnership. So become that he overdrawn his money. Satna overdrawn his money. Satna overdrawn the business money. Cause the Satna owed to the partnership. This is a difference between these two. One balance brought out in the debit, one balance brought out in the credit. Means that Satna had to pay partner. Now let's continue. Tia and Satna are considering transferring 7,000 from the business bank account to an interest-bearing deposit account. So they want to take out 7,000. Put into the FD lah. This is basically this fixed deposit, which is given the interest to earn interest. So this is the income. Okay. They say that advice, okay, the differences between the 2000 onward question is that 2000, they start to combine O-level question. They mean O-level and the IG student basically take the same paper. The question set, especially theory question. Before 2000, the question quite straightforward. They ask for the theory. But start from this 2020, the question they ask is not straightforward. You need to use business sense to answer. They say advise partner whether or not they should make this transfer. Justify your answer by providing advantage and disadvantage. When they say advice, you presume that yourself is a professional. Advise whether, yes, in your question, when they justify, always put pro and con. Pro, that means you agree. You agree with the suggestion. Okay, and then con means that you are not agree. Disagree. What you disagree, what you agree. Read from the question what they ask. They say, Tia and Sama are considering transfer 7,000 from the business bank account to an interest-bearing deposit account. So this is a sentence that you had to think whether good or not good. When you say good, when you agree to transfer to the FD, what is your idea? You say good. When you say not good, what is your idea? You must, both answer must be there. When they say justified. 4 mark they given. Okay. From the top of the question, we see what is related that we can try to find the information. Okay, you saw the bank amount. Bank only left 8136. So this is the first information that I want to put it in first. So I gather the information. Bank has 8136. They want to transfer FD amount 7,000. After that, balance. Give me a minute. Okay. Balance left with the a bit rush already. 81136. So left with this amount. Logic thinking. Is good, yes. I put in FD, I can earn some income. But the interest maybe we will get 5%. 5%, let's say 5%, how much you can get for the interest? So 7,000 times 5%. Only how much? 35. Okay, only 330, 350. Okay, this is the amount that we can get. Compare balance for a business. If you have money only 1,000 in the bank, it's very risky for you to run the business because cash is a king. So you don't have enough money, then how are you going to run the business? But we still have to logic thinking. We should not put lah. But since they say advantage, disadvantage, we must talk. What is advantage first? So advantage is putting into the to earn some to earn interest which can increase the profit because income is increase the profit. That is advantage. You need to, when you come to this type of theory question, you need to see how many marks they allocate. So since that they only allocate 4 marks, you can try to put 2 advantage, 2 disadvantage after that conclusion. In more than enough already. But in here, I won't give a lot of advantage. I give 1 advantage only to earn the interest because I didn't see the benefit to put in the money in there. Okay, disadvantage. If you want to talk another disadvantage, advantage, because from what I see, the question is another way is you saw Satna don't even earn so much, but yet he want to take so much. So one of the advantage that you can think about is to prevent partner. Don't say who, just say partner. To prevent partner to withdraw money. That is the advantage if you want to talk about, because from here I saw this is not good because you not earn so much but yet you take so much. Disadvantage, when left with the balance 1136 is not enough for day-to-day operation. So you're not enough to pay off. So when you're not enough to pay off, what problem that you will face? May have difficulty to get supply of goods. Okay, then it will affect the sales. So this also can be the disadvantage. So now come to this type of question. When they say justify advice, okay, after you give advantage, disadvantage, the one more mark you must get conclusion. Don't forget your conclusion. How you want to make conclusion? Based on your own opinion, conclusion can be advantage, can be disadvantage. Up to you to choose. For me, I will choose disadvantage because if I left with 1,000, it's really serious cash flow problem. Conclusion is, I would advise the partner not to transfer, do not transfer the money to interest-bearing deposit account due to the cash flow is not due to the money, okay, due to the balance of money unlikely to run the day-to-day business expenses. So this is a conclusion. This conclusion give you 1 mark. So don't forget. When you have this type of question, always remember advice. After you advise, your advice is based on the fact that you can see. This is a fact that I can see. I can see the fact here. The money not enough. I can see the fact here. I can earn some income. So I use the fact to support my advantage, disadvantage. But last sentence, conclusion, up to your own individual preference. You think you like to support it, you support it. If you don't like, you can disagree. Make conclusion, you advise. I will advise the partner, yes or no to transfer. So in here, I say no. Do not transfer because the balance unlikely, the balance of money unlikely, let me add some more word, unlikely enough to run the business expenses. Okay, question 4. Arjun is a sole trader. Arjun prepared the trial balance on 31st January 2020. The total of debit and credit side differ. That means difference. The difference was placed in the suspense account. So after that, he discovered all this. Okay, let's see what are the questions. Prepare the journal entry to correct the error 1, 2, and 3. So we just put in the journal. Okay. Journal error number. Okay, this one is the detail debit credit. Okay, the question only asks us to prepare 1, 2, 3, but we can do all as an exercise. For number 1, the error. The total of the discount received column in the cash book January 135 has been credited to the commission receivable. This is a same class but wrong account. So same class, wrong account. This is a same class but wrong account. So this error we call error of commission. So this to take notes. So the double entry to adjust it. Credited to commission receivable. Commission is a wrong account. Commission receivable is a wrong account, which is 135. And we put back to the correct account. Discount received. Discount received is in the credit side 135. Okay, just check whether narrative is required or not. Okay, narrative are required. That means we have to write the reason for this adjustment. So we can put in correction of error for discount received wrongly credited to commission receivable. Okay, this is the correction that we make. Okay, second, 200 received from the sales of fitting. Net book value of 150 has been correctly debited but has been credited to the feature. That means here they say that has been correctly debited, but this is a sales of the fitting disposal. Okay, has been 200 received. This is money received, debit bank, credit disposal account. Okay, this double entry should be debit bank 200 and credit disposal account, which is 200. So this is a money received. So they say that has been credited to the feature and fitting. The main feature and fitting account is wrong. So we put in, we reverse. Okay, reverse the feature and fitting. Put into the disposal of fitting, feature and fitting, feature and fitting and fitting account. So the amount 200, 200. Okay. Next is, okay, you need to do the reason, correction of error for receipt from the sales of fitting. So this is the reason that we put. Number 3, cash drawing 40 has been correctly debited but has been credited to the purchases account. By right, the amount. Okay. This drawing, cash drawing should be debit drawing account, credit cash account. But we go and credited purchases. So that means this cash should be in the credit side. Cash should be in the credit side, but we didn't put in. But we go and put purchases. So we had to reverse the purchases, which is debit purchases, and credit the cash. So this is the adjustment. So correction of error for cash drawing. Now, next, number 4. If your question asks to continue, you can continue. If not, you can just stop in here for the question A. Okay. Number 4, the total of analysis column for cleaning in the petty cash book 73 has been transferred to both the cleaning account and the office. That means cleaning account is correct, office expenses is wrong. So we need to reverse out the office expenses. So in this case, one side error, we have to use suspend account. Suspend account and reverse the office expenses. Okay, so here 73. Okay, so this is the amount that we get. Adjust this one, no need to adjust the cleaning because cleaning account is correct, office expenses is wrong. Next number, okay, you want to put the reason, you can put down. Since that this is the extra, I don't put the narrative already, okay? Question 5. The purchase of equipment 575 has been credited to the purchases repair account. Asset, non-current asset become expenses. So bank account has been, the bank account has been credited. That means this is a wrong class. So we have to debit equipment and credit, but credited, sorry, this one they say credited. So the key is they should be credited to the, that means we have to debit back. We have to debit back equipment repair because this should be reversed out. So we have to debit it. This one have to put back. So in this case, both also debit. We have to use suspend account. So here, 575. So take these two amount, add together. Okay. Now, question 6. No entry has been made for a check payment for office expenses. No entry has been made for check payment. They mean omission. Okay, so this question 6, number 6 is omission. So we have to debit office expenses and credit the bank because it's a check. So 90. Next is 7. A check 69 paid to Simon has been posted to account of Simon. So pay to Simon, pay to Simon, but we go and put in Simon. So Simon should be the one receive it. Simon is the wrong account. So we have to reverse out Simon account. Okay. So pay to Simon, Simon received 69. But Simon is the wrong account that we put in. So this is the error of omission because it's a wrong person, same class. Whereas this one is the omission, error of omission. Okay, so now let's see what else the question asking about. Okay, they asked to prepare the, they say prepare the suspend account, include the original difference on the trial balance. They mean they want us to find the opening balance. So put into here to see easier. Okay. We do not know the opening balance, whether it's in the debit side or credit side. So 2020, January 31st. So we just leave the first row first because we don't know debit or credit. Based on the adjustment that we made here, those account needed the suspend account. For example, this one. Okay, and then what else? Here, one more, suspend. And then, okay, that's all, just two only. Then we put in. Here is debit, so we put debit. We put office expenses, opposite account. Always remember, it's the opposite account. So the amount, 73. And then come to this one, this is in the credit. So we put in into the credit. So this one is how much? 575. Because it's only two, so that means we should have this side balance. So in this case, we bring this one up. Okay, so subtotal subtotal. Okay. Here take the credit minus 73. So we get this one, balance brought down, or we can put, if you don't want to put balance brought down, you put the trial balance difference also can. Okay, so this is the account that we get the amount 1077. Okay, the next one. Okay, in complete the table by place, indicate each of the area will affect the Arjun capital account. So let's see what's the information. We go to the all the adjustment that we made. Okay, I type in the impact, the info first. Error number. Error number. Increase capital. We decrease capital. No effect on capital. Okay, let's see. 3, 4, 5, 6, 7. They want this few only, this few only. So we go up to the side by side. Look at all the journal entry that we made. Okay. For number 3, debit purchases. So here cash credited, cash reduced. Okay, this one is cash reduced, but this one is the purchases before the, is that what it say? Let me go back to the question again and check one more time. What is the question they ask? Okay, complete the following table by place a tick in the correct column to indicate how each of the error will affect. Okay, this question they asking is before the adjustment. I mean, before this adjustment, this information, this number is 4C. They're asking that before adjustment, that means before the journal, what is the impact? Okay. Now, let's see number 3. Cash drawing has been correct. Read debit but has been credited to the purchases account. When credited to the purchases account, credited to purchases account, cost of sales decrease. When cost of sales decrease, profit increase. So profit increase, capital increase, because profit is under the capital section. So this is the first impact that we get. So means this one is increase. Okay. Next is number 4. The total of analysis column 4, cleaning in the petty cash book, has been transferred to the both cleaning account and the office expenses. Office expenses is expenses account, which is expenses overstated. So office expenses increase. Expenses increase. Profit decrease. So profit decrease, capital decrease. So our capital decrease. Okay, next. On 4, The total of the analysis column for, okay, sorry, this one 4 done already. Question 5. The purchases of equipment 575 has been credited to the, okay, when we credited, expenses credited. Okay, this question is expenses credited. When expenses credited, expenses decrease. Decrease. When expenses decrease, profit increase. So profit increase, capital increase. So this one, capital will increase. Next is that on 6, no entry has been made for the check paid for. That means office expenses understated. Office expenses understated. Okay, expenses understated. So expenses understated, profit will be overstated. Profit overstated, capital overstated. Overstated means the increase. Okay. Next. A check 69 paid to Simon has been posted to the, so you notice that both are the same, not related to the Simon and Simon are trade payable. So it will not give impact, no impact to profit. So that capital also no effect. So this is the last one, 7, no effect. So go through one more time, read through the notes about the effect on this 4C. So I copy paste into here. So this is for this answer. Okay. So now let's move on. Here that D, they ask that state the 3 advantages. Okay, what is the benefit of as a sole trader? Number 1, easier to make decision because everything is by the owner, because only the owner can make decision faster. Okay. Second is that in terms of setup, easier to set up the business. You just need to register your business, then you can start to do the business. Okay. Number 3 is will be easier for the person doing the account. So trader compared to the other business is the account is easier to manage. Account is simple compared to other type of businesses. So there is a benefit that you can talk about. One important thing, why people like the sole trader, because profit does not need to share with others. So there is a best thing. Okay, that's all for the question 4. Okay, last question of the paper, February-March 2020. Okay, this question is the ratio. So they asked to calculate the profit margin. Okay, let's put in profit margin. Okay, here they want to put working. Okay, this is the answer. Let's see what is the information can gather. Okay, profit margin is taking the profit for the year. Okay, profit for the year divide by the revenue. Profit for the year divided by the times 100%. So there is the formula. Profit divide revenue times 100%. So working show in here, answer put into here. They already get ready the space for you. 27900 divide 18600 times 100%. Okay, so here, this is the formula. You must show the working, how you get the answer. So now take 27900 divide 18600. Then times the, okay, this one times the percentage. I change it into the percentage. So with me a minute, percentage. Okay, so this is the answer, 15%. So for the first question, okay, now done. Okay, second question, trade payable. Trade payable turn over in day. They want to put in day. So the working and the answer. And they already told you that must round to the next nearest whole. So be careful with the word. Okay. The formula to calculate the trade payable turnover is taking trade payable divide credit purchases times 365 days. So this is a formula to calculate. So now equal to trade payable is how much? 9435 divide credit purchases 93075 times 365 days. So this is the formula to get the answer. So we calculate this now, equal 9435 divide 93075 times 365. So we get this one. If you see the number here, okay, just in case that you got, I just put 2 decimal to show. So here we get exact number. So in this case, you don't need to round up, round down issue. So in this here, you just put equal 37 days. Don't need to round up because exact number that you get. So here will be the answer. Now next is trade receivable. Trade receivable turnover day. Working answer. Okay. You bring it up first. Okay. The formula is trade receivable divide credit revenue or credit sales also can. Okay. And then times 365 days. So if this question don't say credit, so you assume this is a total credit, because they didn't mention, so you assume this is total credit. So trade receivable 14010 divide 18600 times 365 days. Okay, so we use the formula to calculate, equal 14010 divide 18600 times 365 days. Okay, now you notice that this is not decimal, but in the exam you don't need to put so many decimal. You just put 2 decimal to show it will do. Okay, now, but answer. Your this working, you show into here, 27.49. After that, in here, you put 28 day, because always remember, you must round up instead of round down. So it's slightly different with the next. So this one is round up. No matter how, you have to round up to the next day. Liquid ratio. Okay, answer. Okay, let's move on. Okay. Liquid ratio is current asset minus inventory to current liability. So here we have, that means we don't include the inventory. So means that only with the trade receivable. Okay, only trade receivable. And then we have two liability, 9435 plus 2240. So the amount 14014. Okay, 9435 plus 2240, 11675. Okay, next is that we need to calculate first. So we put 14010 divide 11675. So we get 1.2. So the answer is 1.2. Okay, answer 1.2. But okay, let me put down here 1.221. Answer must put into this way. Put in 1.221. Behind always must be 1. So take note of it. This is trying to tell you that each $1 of the liability, you can use your asset to cover. So 1.2 to cover it. Okay, next. The bank overdraft limit is 2,500. The trade payable turnover for the year is 35 days. So this one is what financial year? This is 2020. Okay. So the bank overdraft. So now we put in 2 years, since that they got 2 information. So here 2019, 2020. Here bank overdraft. And then trade payable turnover. Bank overdraft is 2500. And then trade payable is 35 days. And what based on our analysis 2020, bank overdraft is 2240. And then the trade payable turnover is 37 days. 37 days. Because this analysis will help us side by side when we do the analysis. Advise Adi whether or not he should delay paying trade payable in order to reduce the bank overdraft. Justify your answer by considering the effect of both the balance and the trade payable. They say that should he delay payment? What is the consequences when you delay the payment? What is the benefit? Advice you have to give pro and con, benefit, disadvantage, and the advantage. So delay paying to reduce the bank overdraft. So when you delay, this one will increase. Okay. Justify your answer by effect of the both. So they want you to talk about the trade payable and also the bank position. So in this case, we talk how many marks. Let's see how many marks they provide first. They give 5 marks is quite a lot. So first, we talk about bank. What is the bank bad side effect. Bank overdraft, when you delay payment, okay. Bank overdraft reduce. So good thing when you reduce, lesser interest for bank overdraft charged by bank. So this is a benefit. Okay. And also that you see the bank loan in here. We saw the bank loan. They say that bank loan repayable 6,000. Bank loan also need to pay interest if have to pay interest and principal. So what we can use is that we delay payment to supplier, to the trade payable, then can use the money to repay bank loan. But this is not advisable because, okay, I put in but, however, it is not advisable. Why is not advisable? Because interest for bank overdraft is more expensive than bank loan. So this is the analysis that I need from both angles. Even though I want to pay the bank loan, but I don't want to pay bank loan because it's more expensive, the interest, compare both bank loan and the bank overdraft. So in this case, I will not use it to pay. Next is what else that we can see from here. Okay, we have talked about 2 points about bank. Okay, now talk about the trade payable. Since that because it's 5 marks, you have to 2 point, give 2 point enough. Okay, the trade payable, based on the analysis in here, 35 to 37. So trade payable turnover increase from 2019 to 2020. This guy is called Adil. Adil has delayed the payment to trade payable or supplier. Okay. Then what else? Even the delay can save of interest on bank overdraft, but supplier may charge late interest to RD and cost in expenses increase. Okay, second thing, most important is that when you delay the supplier not happy. Moreover, the supplier may stop supply the goods to RD and affect the sales and revenue. So this is important. You don't have the goods to sell, then you can't do business, you can't make money from there. So the profit will be affected. Okay. Now, two point here for bank, 2 point for the bank are trade payable. Now we make a conclusion. So what is the conclusion we want to talk about? Whether we agree or not to agree to delay the bank overdraft, to delay the payment just to save, to reduce it. So for me, personally, I'm not agree to delay it because the consequences is more critical. If you see the point that I'm putting here, the consequence is more critical when you didn't pay supplier. If a supplier stop to supply, then you don't have the business. You can't sell. You can't continue business. So the conclusion, you see, you can say that I would not agree, or I would advise, okay, I would advise RD to pay trade payable on time to avoid the discontinuous of the goods supply and supply affecting the relationship between RD and supplier. The interest charge in bank overdraft may able to earn back through the sales of goods. So when you're able to sell, you can cover your interest. There is a meaning of the conclusion. Okay, so there is for the question. Now let's see. Suggest 2 other actions which RD could take to reduce the bank overdraft. So one of the way is maybe delay the purchase of non-current asset. Postpone it or rent it. Don't buy. Go and rent. Second is that inject additional capital into business so that you don't need to have the overdraft. Next is, other than that, if you compare the interest, okay, compared to the interest, bank loan is cheaper interest. So we should advise him take more bank loan instead of bank overdraft because the interest rate is cheaper for bank loan. Because bank loans count by yearly interest, bank overdraft count by daily. Okay. Other than that, for RD, because he's sole trader, he may take for personal use. Reduce drawing in the business. So don't take so much for personal. Okay, 4 items, 4 point enough for it. D. State 2 reasons why RD should produce an annual income statement. So when you prepare income statement, you are able to calculate the profit for the business and to see performance of business. So this is a good thing about. Second thing is that you are required by the law. Okay. Adi has to submit income, personal income tax, his account is more reliable if proper annual income statement is prepared. So for this type of theory question, so take notes that you don't 100% follow. You can do what you think necessary and make sense, because this is a business sense. Okay, next is that if the Adi want to expand his business with the income statement, Adi can plan his business in future when he has annual income statement. Next is last one, section 2. State 2 reason why Adi should apply the money measurement. So what is the money measurement? Money measurement principle. Is an accounting recording must based on monetary term for recording. Cannot simply put the account amount into the account. That is called money measurement. Okay. So why state 2 reasons? One of it is, always remember, account is always by the law. Okay. Required by the law that business has to prepare account for tax submission. So this to avoid query from the tax department. So there is an important, must proper record the account. Second is that money is a widely used in the business. So that's why it's more accurate. Next is that easy to make comparison from year to year for a business. Okay, 3 points is good enough already. So that is for the recording today.